right, everyone. Thank you so much for joining us. Welcome back to the Thought and Action or Keep Your Money podcast. I haven't decided what I'm going to call it yet, but I'm here with Craig Wendell from Align, and I'm super excited to talk to him today. Thank you, Craig, for joining us. And before I start, I always try to give to give a little overview so I can give some credibility to the person that's talking. So Craig was introduced to me by a client of mine who said, you got to meet this guy. He was selling my business, and in 4 phone calls, he got me $5 million. And I was like, okay, well, I'm interested. How much is it going to cost for me to talk to him? if he's doing that kind of business on like 4 calls. So I wanted you to meet Craig. He's awesome. He's been a great resource to my client. Like I said, we've got to know each other a little bit over the past couple months. But he's got a really good, I think, perspective on business and exits, obviously, because of what he does. So what I want to do real quick first is to just, Craig, let's just start this off. Give me a little bit. I know you've got a unique background. So tell me a little bit about your background, and then tell me about your company and how those, how that all fits together like peanut butter and jelly.
Yeah, absolutely. Thanks, Eric, and pleasure to be on here. And indeed, it was 4 phone calls and $5 million. Got a deal from 11 to 16 effectively overnight. A little bit of tactics and strategy, but more importantly, the industry knowledge and the know-how that we have to be able to actually execute for our clients and generate value for them. I'm, like you said, I'm at Align Business Advisory Services, managing director, manage our front office. We're a team of about 20 different professionals across the United States. Really only focused on 99% of what we do is sell-side mergers and acquisition advisory. So business owners that are looking to either trade a portion or trade all of their business, we would effectively are your advisors, your agents in that regard. I'm a career banker, been doing this for 16 years. I'm well over $4.5 billion of transaction value across almost 100 deals now. Not a lot we haven't seen. Every deal requires the same amount of attention from small deals all the way up to multi-billion dollar deals. So we're a firm focused on businesses in the lower middle market, entrepreneur, family-owned businesses that are really searching for the optimal home for their business, whether that's to maintain their legacy or change up, a portion of their life, find success and find financial freedom. We help partner those clients with prospective buyers, whether that be private equity or strategic large corporate companies.
So, just real quick pop quiz, largest deal you've ever done?
It was about $1.1 billion deal.
What's the smallest deal you've ever done?
$4.5 million.
There you go. So we've got the gamut, which is great, and obviously structured differently. But obviously some good knowledge coming at you. So one more. How many deals have you done in the last year?
This last year in the last 12 months, we've done 18. We're sitting here, beginning of December, end of November. We got 4 more to execute here in the next 4 weeks. So it's going to be a busy December into the first part of January. But we'll do anywhere between 20 to 30 deals per year across multiple different industries.
First, I think real kind of like question that comes to mind, because I hear a lot of people, I've talked to a lot of business brokers, full disclosure, I've told you that too. And I love the way you guys do business. Take me through what a successful exit looks like to you.
Yeah, it really comes down to what that individual's needs are. This is at the end of the day a people business. It's a partnership going forward. I mentioned earlier, for those business owners, to maintain their legacy or solidify their legacy. A lot of the folks in the lower middle market, and when I say folks, I mean business owners and businesses, are family owned or entrepreneur owned, and they've never gone through a transaction before. They don't really fully understand the actual value of their business. And so we really help educate them and help them understand the value of their business in the market, and then show them the pathway of what an ultimately successful transaction would look like. And I'll tell you, kind of skirting around the answer here, because it's a la carte, right? It is what that client is looking for. We have clients that sometimes come to us and say, hey, I want to 100% exit my business. I want to move on and build other businesses, which is fine, right? And we can do that, and we can execute on that. We just did one with one of your clients, Eric, and so that's one thing. Then we have another client that, family-owned business. Mom and dad want to exit the business. The two brothers are all owners in the business today, but want to continue to build the business and take it to the next level. But they know that from building it, up to $100 million business that it is today, to build it to the next 200, they need help, they need resources, they need access, and that's what investors, that's what partners bring to these owners and to these family-owned businesses and founders. That really, a lot of times we find that our clients don't really even understand that it exists, that there's capital out there, there's investors out there to be able to take your business to the next level with you, still, as a partner, maintaining, operational excellence, everything that's made a business successful, ultimately transacting a portion of that today, and then taking it to the next level, solidifying that legacy, and ultimately creating more success than what you thought was even achievable. It's really fascinating to see. So it really varies by client, and the best part is that it's a blank canvas, and you can paint it however you'd like.
So you introduced me to a term, the second bite of the apple, which I think just kind of dovetails on that, what you were just talking about, having a partner come in. Can you just give me an example of how that might look for someone who's like, hey, look, I thought that the only way to exit was to exit. Like that means leave. So what does that second bite of the apple look like, and how does it typically work out?
Yeah, excellent question. And a lot of times, since we do this every day, we talk about it. It really it can become second nature to us. But effectively, the second bite of the apple is your rollover equity. So to back up, these deals are structured primarily in cash and also a component of equity. So an investor or a large corporate strategic is going to come in and say, hey, I'll offer you 75% cash, 25% what's called rollover equity. Effectively, that 25%, and it's usually anywhere between 15 to 30%, but we'll just call it 25%. That 25% allows you to enter the cap table of the acquiring company. So they're going to give you 75% in cash. So say it's $10 million deal. You put $7.5 million in your pocket. That other 2.5 then enters the capitalization table of that acquiring company. So effectively, today you own 100% of your business on the equity portion of it. I'm telling you your entire business is worth $10 million. I'm willing to give you 7.5 of that today. And then the 2.5, it gets effectively rolled over on a tax deferred basis into, again, the capital table or the equity table of that acquiring business. So you own a smaller percentage, but a smaller percentage of a larger pie. And so what happens is these businesses that look to acquire companies such as our clients, ultimately they're building their business to exit their business. These investors have bosses too. They have a lot of, when we talk about investors, we talk about private equity firms, hedge funds. These investors that invest into those funds are high net worth individual, insurance companies, pension endowments, you name it. It's these large pools of money that need to invest dollars to be able to return that to either their customers or their shareholders. So private equity has bosses too, investors have bosses too. A lot of times people don't think about that. And so if you take that notion and say they need to grow businesses higher and higher and higher and grow the cash flow EBITDA higher and higher and higher, that's doing nothing but expanding the equity value of that particular business that acquired our client, or that founder or family-owned business. And so what it does is it really allows you to be able to not only continue to work in your business, but you don't work as hard, right? Because you have all this access and resources and sophistication that a partner is going to bring to you, and you're growing your equity, and it's not all of your sweat equity. It's growing on the backs of all of your partners around you. So you're effectively, many hands make light work, so to speak. And so, by doing that, you have the ability to capture a significant second bite of the apple. Typically the second bite of the apple, which would be that 25% in the example that I mentioned earlier, that 2.5, typically turns into a multiple of basically that return on equity. And it's anywhere, average, it's tough to pinpoint because industries are different, but it's anywhere between, call it 4 to 7 times, that initial, that rollover equity. So you turn in $2.5 million into 5, right? You're turning into $10 million bucks. So, that's possible. I've seen returns as big as 39. I've seen returns as small as 2.5. But the average is anywhere between 4 to 7. Depending on the industry, that could ratchet up. It could go into the teens. Apex is a large HVAC, plumbing, electrical business. They just recapitalized for $3.4 billion last month in October. And that return on equity from those original investors is rumored to be, high teens, in between 15 to 20 times that equity value. So, that's every dollar is worth 17 effectively is what that means. And that's an exceptional return. So that's where you create generational wealth. We were talking about it earlier, Eric, by sitting on cap tables and having ownership interests in businesses. That's where you create wealth. That's where you create generational wealth. And more importantly, it's on a tax deferred basis. And then if you have vehicles like what Eric and team can do to be able to minimize your taxable burden and structure your investments, in the appropriate manner, it exponentially increases your overall wealth. It's very fascinating.
I mean, that's a whole nother call, because it is, to your point, being on cap tables and how to really grow wealth after the fact. We should do another one of these where it's like post-sale strategies, and I appreciate the plug too. That was nice. So most brokers I speak to will say, like, we need to begin early. That's like famous last words of like every one of these calls I'll have. Hey, we got to start earlier the better. So I think it scares people for two reasons. One, if you just want to leave, like most people will engage, someone to like sell their house or sell their business or whatever when they're ready to go. They're like, oh my gosh, how long is this going to take now that we need to begin early? What does that mean? So being that most people say that, can you give me context of what that means from what do you actually need? And then what do you ideally want when it comes to engaging with the company to sell?
Yeah, ideally need, and let me just start by saying, in the deal world, you have to have everything, buttoned up before you go to market, right? You really only have one shot to make your deal, as valuable as possible, maximize valuation. Because the reality is on Wall Street, it's a small community and folks talk. And if you go out to market and you're not prepared, you pull that deal from market and then you go back out to market, you become what's called damaged goods. And so, everybody knows where damaged goods go in the store, on the back shelf, on the bottom, in the back of the store, right? So, and that obviously denigrates value. So making sure that you have everything accounted for and you're buttoned up appropriately and you have a strong go-to-market strategy, that's what's most important. It comes down to tactics and strategy, and you got to have a defined plan and process, which we do. But the things we need up front really it starts with financials, right? You got to be able to underwrite the deal. Whether we like it or not, we're in a high cost of capital environment relative to the last 15 to 20 years. We don't expect that to change anytime soon. And so to get deals completed, the lenders and the investment committees have to underwrite the deal. And that's typically based off of your last 12-month worth of financials, more on what's EBITDA or earnings before interest, taxes, depreciation, amortization. Think of it more as your true cash flow of the business and what the business is earning. So we ultimately want to be able to look back 3 years, on your P&L and balance sheet, and then really understand where the business could go with a partner, or maybe if that CEO or owner had more runway or 20 years, younger, what would they do with the business? To really understand the strategy and the go forward nature of the business is what's paramount to being able to position and align your strategy most effectively. I tell you, it varies based off of clients in terms of their actual timing. Our sweet spot in the M&A world is anywhere between 5 to 7 months, with 6 months really being the sweet spot. Now we have clients that are, we also provide, educational evaluation guidance up front and tell them what the market opportunity is for their business. So, sometimes it takes 3 months to get somebody, fully engaged and rolling. Sometimes it takes 6, sometimes it takes a week, right? So it depends. But also for us is we have a prospective client right now that is going to sign up with us here in the next month or so. We took a look at the business last year, actually a year and a half ago, and it was getting crushed by COVID supply chain. The customer demand was still there, but it was getting crushed by COVID supply chain. And so, and the two owners, older but still in the business, still running it, kind of just wanted to move on and take a step back, which is fine. We see that quite a bit. And so we looked at the numbers and we're like, this, if we could trade you today, right? But if we do that, we're losing a lot of value of what the business overall could be worth, just because of the shocks that we got from the supply chain issues. So if you have time and gas in the tank, let's wait 12 months and see where the numbers come at. And now, they're sitting at about $9-10 million of EBITDA, and effectively just, over 12 months generated $55 million of value like that, right? So we're not going to bank somebody to bank them. We're going to help educate them on back to what does a successful exit look like. It's more, what are your desires, what are your needs, and then we'll figure out what that all looks like and have a constructive conversation. And it's really more a partnership between us and our clients, advising them, in their world, because the reality is, a lot of times it's their baby, and it's one of the most critical, important things that they have in their life. And so you have to be able to steward that appropriately. And that involves, all the things that I just mentioned. That's
really cool. What's interesting is that, like, multiple times on this, what I was looking at the time, it's like 16-minute podcast. You've said, if we, they did this, they made a couple million. They did this, they made a couple million. This last one was like, we stewarded this person to help them make an extra 55 million. I mean, these are like nuggets, man. You're like just throwing them out. Like, this is really, it's a cool thing to kind of hear all smashed into, 16 minutes of time. So hopefully people are like, got their eyes open or their ears open, I would say. And then on top of that, if they miss it, like, listen to it again, because there are certain things that you've said that I think you're all about adding value. If that's what I kind of hear across the board, it's like, you can sell anything. Like, I like it. Same, like on my side, there's things that we can do. We're trained to do it. It's not a big deal, but we're at the point in our careers where I want to help people be a good steward of what they have. Is that really the right thing to do? And if there's a way to do it better, what I'm hearing is that, you want to do that. So it brings me to like my next question, like, who is an ideal candidate to work with you? Like, what's an ideal candidate of somebody that says, I want to sell? Like, is there people that are better fits for business brokers than not? Like, how does that work?
Yeah, I mean, so, we differentiate ourselves a little bit from the business broker world, kind of view ourselves more as M&A, investment banking advisors, so to speak. And the key difference there is that business brokers will post, a business onto a website. You can go to buybizsell.com. It's one of the largest ones in the country, and just kind of sit around and wait like they're posting a house to buy, right? Like a realtor. For us, we're very, very confidential, very strategic. We go out to buyers and say, hey, if you have interest in this XYZ business, we'll work with you in terms of finding the right structure and value of what our client wants and needs, and the desires for their go forward nature. So, an ideal client, really is one that, well, it's kind of twofold. One that, knows that there's value to their business and that they need help unlocking that value, but also wants, something a little bit different out of their next chapter of their professional career, whether that's in the business they still currently own or, a full exit. We did a deal earlier this year, a contract manufacturing deal. Young guy, young CEO, 32 years old, 31 years old. It ended up being a $27.5 million deal. And he rolled, remember we talked about rollover equity earlier, he rolled 40%. So he owns 40% of this business in the go forward, aspect of go forward ownership. And so he was one that needed help and needed growth from a professional perspective. And one thing that we helped him understand is really when you're a CEO or you're a president or an owner in a company that's private equity backed or has investors invested in the business, and you go out there and you crush it every day like this guy's doing, continuing to do. They just build a new facility and they're expanding like wildfire. You do that, you're entering professional circles that you thought maybe frankly never existed. You're advancing your career. And long term, it's going to end up being a 9-figure opportunity for him and his generational wealth. And then he can use the money in his first transaction to be able to take care of daily life. and have his kids be fine. So, that's one where he was younger, but he was hungry. He needed growth. He knew that he needed, some sophistication from an investor that's already done it before or has similar types of assets that they can help bring best practices and take and build a business to the next level. So somebody who's focused on growth, somebody who's focused on locking in the value, maximizing the value that they have today in their business. And if you're not focused on growth, that's completely fine. You fully want to exit your business and take the value of your business today and move on to a different sector, a different industry, and build businesses there. We did a deal in the central U.S. last year, younger operators, but one of the things that really stuck out to me, and they had a great exit and still involved in the business, but one of the things that stood out to me is that this owner he's on the leadership team of this private equity-backed strategic that acquired them. It's a $2 billion top line business, revenue business. He's going into these leadership meetings for his region and ultimately the company as a whole. And he's just observing. He's observing how these leaders of a larger organization, conduct their business, what they look at, the different KPIs, the different metrics, all these different things, and just absorbing it all. Because he knows that once that business trades again, which he'll have the opportunity for a third bite of the apple, which we can talk about, but he knows that then he can take the knowledge that he's learned, the best practices that he's learned from these C-suite leaders who are running a $2 billion company, and implement that into a smaller scale and build the exact same business that he's already built, just do it at a heck of a lot more velocity and with more value. So, those are the ones that are really fun to watch, because then, they become recurring clients in the future. But ultimately, we just love seeing their success.
Is it fair to say too, because you mentioned it in a couple of ways, like, you're not putting businesses out just like putting them out on like an MLS, but you're going to buyers. Is it fair to say that you open doors to certain deals and that, certain people, when you can kind of meet someone that's a good fit and craft their business a certain way, you might introduce them to a potential buyer or a potential fit that they wouldn't see anywhere else? You open access to things?
Well, 100%. 100%.
So it's not just finding like the ideal, like I'm going to get a better number for my sell. It's actually finding a better situation and opening doors to situations that may not even exist.
That's exactly right. And I'll tell you what's critically important there, and for us as a firm, is 80 to 85% of the transactions that we advise our clients on don't go to the highest bidder. They go to the best fit, the best partnership. Obviously, our value that we give to our clients, and our job is to minimize the valuation gap as much as possible. But it really goes to the best partnership, because at the end of the day, like there's millions of dollars on the line. But at the end of the day, in most of these deals, you still got to put on your pants and go to work the next day. Right, after receiving a massive multi-million dollar, tens of millions of dollars, sometimes hundreds of millions of dollar wire, right? And when you go to work the next day, you want to be with that partner, or have trust, have honor in that relationship going forward to make it fun, right? And so through our processes, the access that we have to investors on Wall Street, if you think about it, there's about a little bit over 14,000 registered institutional investors with the SEC. A lot of those play in the upper market. We have access. We have personal relationships with a third of that market. So a little bit over 4,000, 4,500 folks, private equity investors, strategics, et cetera, that we have personal relationships with, just from years of doing deals, and the partnership that we have at Align. And one thing that's really important is for us, and our reputation that we have on Wall Street as an M&A advisor, is that when we bring a deal to market, that investor community, the private equity community, and the corporates, strategics know that is a bona fide deal, that is a deal that's worth to be had, because they know the business is buttoned up. They're actually not going on a fishing expedition, and they're actually looking for a good partner going forward. And three, which is for us, is they know they're going to have to pay fair value, if not more, because Align's at the table. Similar to the 4 phone calls and $5 million, a $1.25 million phone call in the span of a week, right? So.
All right, so you got 60 seconds. Tell me your favorite success story.
Favorite success story is this guy who's now on his fourth bite of the apple. He built a service business in the state of Florida, HVAC, plumbing, electrical trades business. Sold it, was one of the original investors in a platform. That platform then traded. He made twice the amount that he made on his initial transaction in that second bite. He rolled again. They traded on the third. And by the way, he was out of the business 2 years after the initial transaction, but still had the opportunity to keep reinvesting alongside these large private equity firms, these high net worth individuals. And now he's building his third house on the water in Miami. He's on his fourth bite of the apple and is literally playing golf and fishing. And they call him up and it's a distribution. Like, hey, we have a $3.5 million wire coming to you tomorrow. Is your wire information still XYZ? He's like, yeah, it is. And so, he's now building other businesses and helping entrepreneurs and has his own, foundation and is giving back. And that's ultimately what we love seeing and just seeing and showing, our clients today that this is the opportunity for you long-term, for you, your family, and what's to come after that.
Yeah. Well, I don't want to waste your time, but if someone is considering selling, I think it makes sense to talk to you just to get some good stories and ideas.
Yeah, we're a group that loves to help educate and really help these family-owned businesses, these entrepreneurs that have so much value in their business. They just need help unlocking it. I'll tell you this. I'll leave you with this. Don't go at it alone. I've been on the private equity side. I've been on the hedge fund side. I've bought and sold businesses, personally, sitting on the cap tables. And I'll tell you, when an investor comes to you directly, it's a far different checkbook. It's a totally separate checkbook than the checkbook that they come to when a line or an M&A advisor is running the process on behalf of the seller. Very important distinction.
Super appreciate it. Well, dude, Craig, lots of wisdom, lots of nuggets. Super appreciate your time. Thank you again for being on, and let's do another one soon. We'll do one on that cap table roll up. That's a super cool idea to do another one on. Thanks again, buddy.